But there's something really interesting that's happened with Constellation because of what we're seeing in terms of all of these hyperscalers' interest in being able to spend on nuclear. And for perspective, Joel's gonna take you through right now what the uniform accounting is showing you, but I want you to think about this in terms of regulatory power means you have a set price you can charge for power, but selling power to individual companies, there is not that same price. And we'll talk about the prices in a moment. So Joel, let's take everybody through really quickly what it is that the uniform accounting is showing us about this transformation.
So when Rob mentions that regulatory power, meaning where your price fixed, where the government controls your pricing, that is what it looks like. Meaning when you can't control your price, when you cannot price on a free market, what do you end up with? And on a uniform basis, they end up with a return on assets in 2020, 21, 22 of a less than 5% return on assets. U.S. corporate average is 12 to 14. Global corporate average is 6. China, Germany corporate average is around 4 to 5, and this company is generating even less than that. And what does it mean? It's because they're not allowed to compete. They look more like a Chinese or a German company, meaning where there's more about stakeholders and they can't really seek profits and they can't be free market. And so you end up with return on assets that's much like, frankly, those countries when you're overly regulated. And